fxntradinggroup, what's up guys? Welcome back to the channel. Welcome back to another video. As we continue our Blueprint Summit series, guys, we're going to take a look at weekly market cycles. We're going to go through all the different cycles. We're going to go through examples and really break this down for you so you can get a better understanding of how you can use weekly market cycles in your trading. Without further ado, guys, let's get this started. Cool. So, market maker weekly cycles. Very important for you guys to understand that when I talk about market maker weekly cycles, I'm talking about cycles that happen on a weekly basis. So meaning Monday through Friday. Okay? I'm not talking about the overall bigger picture of the cycle that we were talking about earlier of MAAW or WVVM. All right? So weekly cycles is literally talking about a Monday through Friday cycle. Now, along with that, there's basically going to be three different types of cycles. So there's three different types of weekly cycles that we're going to talk about that happen. The first one is a market maker cycle. Second one is accumulation cycle. And the third one is a trending cycle. So market maker cycles are typically have a false move that happens at the beginning of the week to entice traders to take a directional bias early on, and then they end up having a midweek reversal. So typically Wednesday or Thursday. Accumulation cycles are cycles literally that have, when you look at them on a weekly basis, they look like they basically just went literally sideways and moved basically between support and resistance back and forth, back and forth, back and forth the whole week. Trending cycles is the cycle that you're more likely to see the MAAW or the WVVM. Okay, so let's take a look at some of these cycles, what they actually look like on the chart, so you can get a better idea as to what I'm talking about. All right, so the easiest thing to see on the weekly cycles is if we go out to the 1 hour time frame, just because they'll become very, very apparent as to what they are. Right. So if we go out to the 1 hour time frame, the big yellow dotted lines on the chart is basically the beginning of the week and the end of the week. So you can see Monday through Friday. Now you can see this last week actually on pound USD, right? You had a cycle where you basically went down for 2 days straight and then reversed and then came back up. So this right here would be an example of a market maker cycle. You had a midweek reversal that either happened on Wednesday or Thursday. In this case, it was basically Wednesday. All right, so you had a false move down, weekly reversal, and that would be a market maker cycle. If you look at the previous week, you can basically see where price action just basically moved sideways. And it just went like this. Another dead giveaway on accumulation cycles, which is this is what this is. This is an accumulation cycle, is the fact that the EMAs are running straight through price. So EMA is running straight through price on accumulation cycles. It's a dead giveaway. Now if we go to this week here, you can see that this week was a trending cycle, right? All we did was just basically trend. A big clue to trending cycles is on the 1 hour chart. You'll see that price basically follows the 50. And the 50 will basically keep pushing price down, down, down. Sometimes it'll be the 200 EMA that'll keep pushing price down. But regardless, this is what you'll notice. Now notice that on this particular cycle, or on this particular weekly cycle here, you didn't really have the MAAW. That's because the cycle started the previous week. Meaning that if you look at the previous week here, this week started going up, and then you had a midweek reversal that happened Wednesday, Thursday. And that's actually what started the whole thing. Do you see it? This week here, from here to here, you can see went up, midweek reversal, and sold off. So you typically, in this example here, since this is going down, or midweek reversal is going down, you have sell on Thursday, sell on Friday. You're buying the beginning of the week, and then the midweek reversal comes, and then you sell off. Now, in this example here, the selling basically starts and initiates the next week having a trending cycle, which is essentially what creates the M, the A, and the W. For those of you that are wondering, well, how can this be useful, right? So here's how it can be useful, is the fact that if you're an intraday trader, which basically all that means is that you basically trade on a daily basis and you get in and out of the trade in the same day. So you're day trading, right? Because you're trading pretty much the 15-minute chart. Knowing or being able to identify what weekly cycle you're in helps you predict what the next day could bring. Helps you predict what directional bias you would have. So meaning, if I know that I'm in a trending cycle, what am I doing? You're going with the trend that week. If you know that you just had a market maker cycle, which is essentially going to lead to you having a trending cycle, then you already know you're selling. You're not worried about this trade right here would be like a buy setup. You're worried about actually taking the type 3 trade here and selling it. You're worried about taking the type 1 here, selling it. You're worried about taking the continuation trade here and selling it, or the type 3 trade here, selling it, or the type 1 here and sell it. Let's talk about the characteristics of each particular cycle. So if we talk about just the market maker cycle, so this one here, the main thing is that you have a midweek reversal. The midweek reversal has to happen either on Wednesday or Thursday. It cannot happen on Tuesday. Tuesday is not the midweek. It's either Wednesday or Thursday. Typically, you would also have a full day of either rise or drop leading up to the midweek reversal on Tuesday. So meaning that on Tuesday, you would have a one directional move on Tuesday, and then followed by a test of the highs, in this case, a test of the 200 EMA, and you have your reversal. You come back on Thursday, you retest that 200, and then you sell. Monday, it doesn't really matter what happens on Monday. It's really Tuesday. So Monday, you'll see market maker cycles where on Monday, it'll be like this. And then all of a sudden Tuesday, you'll get this. And then on Wednesday, you'll get this. and then sell, sell. There's going to be different variations, but it's the same thing. The most important thing is the reversal, the midweek reversal that happens either Wednesday or Thursday. On a trending cycle, the big key on trending cycles is actually Sunday, Monday, because leading up to Sunday, Monday, or during Sunday, Monday, I should say, you're going to create the initial high and low of the week, right? So if you see here what happened on Tuesday, you were already trending below that. So that is a dead giveaway of what you might see on a trending cycle. You could have at the very beginning of the week, so like this week right here, let's say if we go back and replay this like this. If this is Tuesday, right, there's no way that this could be an accumulation cycle because the Sunday high low is already broken, right? So you're not doing this the rest of the week. Also, the EMAs are spread out, so very unlikely to have any kind of an accumulation cycle. So what are you left with? You're left with two options, either a market maker cycle or a trending cycle. The fact that you just had a market maker cycle the previous week should tell you that the likelihood of this being a market maker cycle is not very high. So hence giving you a trending cycle as the only option. Just like with anything else that we talked about, patterns, entries, exits, that kind of stuff. It's going to take time of repetitive visual to see this over and over and over again. So Harry, so the trending cycle is this, right? That's a trending cycle. The market maker cycle is, let's say, like this. Monday, Tuesday goes up. You have a midweek reversal on Wednesday. They sell on Thursday, and they sell on Friday. So do these two look the same at all? Do these two things look the same? They don't. So a trending cycle is just what it is, right? It's just a trend. It's creating higher highs, higher lows, lower highs. It's doing that. That's all it's doing the whole week. So if we look back here, so this past week on GU was a market maker cycle. Deadhead, straight down, came back, reversal, midweek. This happened on Wednesday, rise and rise. So that would be a market maker cycle. For this to be a trending cycle, this would need to have continued to go down, right? So when you're looking at this, just ask yourself, spike, 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 spike. Why are they spiking the same area like 5 times? If this was going to be a trending cycle, right, that does this, why are they spiking the same low over and over and over again? Just ask yourself that. You just came off the previous week here. This was an accumulation cycle. It's just going sideways. Do not let the New York session on Friday ruin the whole week. Yeah, accumulation cycles are pretty boring, honestly. For me, I can't stand them. I hate them. But there's still trades that you can take. They're just not, for me, it's just not something that I like to trade. So there's some people in my mentoring group that love accumulation cycles and they love trading them. I personally hate trading them. I prefer not to trade them, just because they don't move how I want them to move, or the trade setups that you get out of them, for me, aren't really worth me trading them. But the setups are still there. This right here is still a setup. 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 So I mean, you still have setups. This right here is a type 4 setup. So pretty much almost every day you have a setup.
So it's not like they don't. It's not like they lack setups. I just prefer not to trade them because I'm trading something. I'm looking for either market maker cycles or trending cycles, so I can try to let them run. Do not worry. By the way, do not worry about too much about what happens Friday, because from what you can see here as well, Friday, right? You should have gotten to buy what you did, but you see the movement here wasn't very much. Fridays, Fridays are used by market makers to set up the next week. Okay, so you may have an accumulation cycle, for example, here. You may have an accumulation cycle like this, and then all of a sudden you see Friday just break. Just because this happened on Friday, the last 4 hours or whatever, does not negate what happened the entire week. So just know that Friday, if you're trading, let's say a trending cycle on, let's say this week here, you're trading a trending cycle here. You can see how Friday, they ran it up on Friday. This does not negate the entire week being a trending cycle. It's still a trending cycle. They just used Friday's last New York session to essentially set up the next week. And the week basically after that was this. So do not let that, don't let that change your mind or whatever. You still had a type 3 setup that happened here on this day. Right here, the pullback to the middle of the range. There's a trade right there you could take. That still meets your directional bias, obviously, because you're trading a trending cycle down. What we typically find is that on trending cycles, they would sometimes like to end trending cycles in the following week. So, meaning that, let's say if these yellow lines is a week, let's say you have a trending cycle, right, like this going up. They'll keep that trending cycle going for like 2 more days, so Monday, Tuesday, and then reverse it on Tuesday. So then you'll get like literally a trending cycle 1 week and then a trending cycle back down the next week. So if you ever look at a week and you're like, I can't really tell what kind of cycle that is, it's kind of weird. If you look at the previous week and seeing if they're carrying that to the next week. Here's a good example of trending cycles. Tuesday, I move up on Monday, tag the same high on Tuesday's London session, and then drop, 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 drop the rest of the week. Remember, like I was telling you on the patterns themselves, that you don't need to trade all of them. You just need to trade whatever one is, kind of you're seeing that you can tell what's the easiest for you to trade. Same thing with cycles. There's going to be some cycles that you can easily identify and that you literally like vibe with. There's going to be other cycles that you can't figure out to save your life, and that's completely fine, because at the end of the day, there's so many different things that you can trade. You have so many different options of things that you can trade, and that's the beauty of it. That you don't have to, just do. You don't have to, find all the 4 different types of setups or patterns. You can just focus on one. You can focus on 2. It's up to you. Whatever's easiest for you to identify. If you think about, if you focus in on, let's say, trading like type 1s, right? And that's all you want to trade. Great. Are you going to get type 1 patterns every day? Obviously not. You're not going to get those patterns every day. Just like you're not going to get trending cycles every week. You're not going to get market maker cycles every week. You will get trending cycles like back to back. You can get accumulation cycles back to back. Market maker cycles, not very much. You're not going to get them back to back. So a lot of this is essentially going to be on you to determine, like, hey, what is going to be the best, the best one that I want to focus in on. So if you look at this here, what does this look like to you this week? What does this week look like to you? If you look at what happened Monday, it went like this, right? There's your initial high low for the week. What happened Tuesday? It dropped below that, right? So that automatically disqualifies it as an accumulation cycle. What happened on Tuesday? Tuesday had a full day of drop. What happened on Wednesday? You went back to retest that same low. And then you went opposite of what happened Tuesday. So that would be a market maker cycle. What about this previous week here? It's definitely not obviously an accumulation cycle, right? So let's break it down. So Tuesday, full drop. Wednesday, we had one more drop, comes back to retest that on Thursday's London session, and then you reverse. You actually had a buy setup London Thursday on London session, and it looks like a type 3 during Friday's day's session. You had a midweek reversal happen here. If this was a trending cycle, you would have had this happen. The fact that you see this and this, okay? That's the difference right there. So you can look at this on whatever, Wednesday or Tuesday, and you're like, shit, I'm going lower, okay? As soon as you see this though, you see this pullback, and then on Thursday, you come back to that same point. What you thought was a trending cycle, you have to pay attention. You're like, shit, they're just retesting that low again. They're trying to get as many people as possible to go on the trend, right? You have to think about what retail traders are thinking. They're thinking this, right? Because all they see when you look at retail traders, when you zoom out the previous week, right? They see this, and all they see is this. So right here is when they catch them, they trap them, and they move away. Some of these cycles, I'm not gonna lie to you, look freaking disgusting and completely ugly. But you can tell, like, you see all the EMAs running through price, right? This is gonna be an accumulation cycle. It's just moving sideways. A dead giveaway for accumulation cycles, same thing, is Tuesday. You just had a strong move, and then you retrace the entire move. Why would you retrace the entire move? If you had done this, if this was the initial high, low of the week on Monday, and it would have went like this, now that's different, right? But it didn't do that. It simply retraced the entire move back to the beginning. So the key on this one is literally what we just talked about, where you have the Sunday, Monday, high and low. It's broken on Tuesday. They literally come back on Wednesday, hit that same area, and go. And like I said, Friday, they just drop. This does not negate what happened the whole week. So here's a major key for you guys, is whatever currency pair you're trading, it needs to match with what your strong suit is. Meaning that if you're going through your back testing and stuff, and you realize that, man, I'm really good at identifying type 1 patterns, right? And I'm really good at trading trending cycles. It's important to make sure that the pair that you're trading those two instruments on, the type 1s and the trending cycles, it's important to make sure that the pair that you're trading actually produces the most of said, pattern that you're trading. So a good example of that would be if you're trading, let's say, type 1 patterns, and let's say your pair that you're trading is pound NZD, right? But you're trading type 1s. That's the setup that you feel the strongest in. What you might want to notice is that pound NZD does not produce a lot of type 1s. So meaning if you go back to as furthest you can go back, which on TradingView it's like 18 months. If you go back and you try to find all the type 1 patterns on GBP NZD over that 18-month period, and you compare pound USD and the same thing, type 1 patterns, and you go back over the same amount of time, what you might notice is that pound USD produces 3 times more type 1 patterns than pound NZD. So you're going to get 3 times more the opportunities to trade your favorite setup if you just switch to pound USD versus pound NZD. Now, I don't know about you guys, but like, if type 1 is your thing, cool. If you can consistently get 30 pips, awesome. But whether I get 30 pips from pound NZD, AUD USD, Euro USD, pound USD, pound JPY, like, I don't care, right? You know what I mean? Like, I don't care which pair gives me the 30 pips. I'm an equal opportunity trader, right? There's no discrimination at all. Like, I care about which pair is going to give me the most trade setups that I like to trade, right? So very important that once you're going through your back test and you figure out what setup you want to trade, that you want to focus on, and what cycle you want to focus on, make sure that the pairs that you're trading are the most optimum for that specific scenario. There's nothing worse than doing all the back testing, having a plan in place, knowing what type of pattern you want to trade, and you're ready to go, but the pair that you're trading is the wrong pair because it's not producing as many type 1 patterns as another pair could produce for you.
All right, guys, welcome back. I hope you enjoyed that particular video. I hope you got some value from it. If you like this series, guys, do me a favor, just like the video, subscribe to the channel, and we will see you in the next one.